Ever found yourself asking why Bitcoin prices swing so wildly? Or perhaps, should you worry about these price fluctuations? It's all down to Bitcoin's well-known trait, volatility. Bitcoin volatility refers to the rate at which the price of Bitcoin increases or decreases for a set of returns. Bitcoin prices are highly volatile compared to traditional finance markets. This means the price of a Bitcoin can change rapidly in a very short time, making it possible for investors to experience significant gains or losses. Now, does this uncertainty cause a stir among investors? Absolutely. The risk associated with Bitcoin price swings can certainly unsettle those unaccustomed to its rhythm. However, it's important to remember that volatility doesn't equate to downfall. It's simply a measure of price variation, not direction. So, understanding Bitcoin volatility is crucial for anyone invested in or considering investing in this digital asset. But is volatility always a bad thing? Not necessarily. In the world of Bitcoin, volatility can be a double-edged sword. Yes, it can lead to sudden and sharp declines, but it also presents unique opportunities for savvy investors. These investors follow a strategy known as buy the dip. It's pretty straightforward. When the price dips, they buy. When it surges, they reap the benefits. Consider the wise words from Bitcoin enthusiast Michael Saylor, who famously stated, "Volatility is vitality." In other words, the very volatility that makes Bitcoin a risky bet also fuels its potential for high returns. It's like a heartbeat, pumping life into the market, creating opportunities for those with the patience and fortitude to ride out the storm. So while volatility may seem like a villain in the world of Bitcoin, it's actually a vital force, generating potential high returns for those who know how to navigate it. Clearly, volatility isn't always a villain. In fact, it can be a vital force in generating potential high returns. Despite being known for its wild price swings, Bitcoin has shown remarkable resilience over time. Its journey, filled with peaks and valleys, reflects its inherent volatility. However, each valley, or price dip, has often presented a golden opportunity for long-term investors. Those who've held their nerve and bought the dip have been rewarded with substantial returns as Bitcoin invariably bounces back, often reaching new heights. This resilience is not accidental. It's backed by Bitcoin's decentralized nature, limited supply, and growing acceptance. These factors make Bitcoin not only a store of value, but also a potential hedge against inflation. Now let's shift our gaze forward. What does the future hold for Bitcoin? Well, one possible catalyst on the horizon is the Bitcoin halving. This event, which halves the reward for mining new blocks, has historically led to new all-time highs for the cryptocurrency. The next halving is expected in 2028, and many believe it could trigger another major price surge. But remember, Bitcoin's journey isn't a straight upward trajectory. There will be dips and there will be peaks. Each dip, while nerve-wracking, can be viewed as a chance to invest at a lower price before the next climb. Future catalysts and Bitcoin's historical resilience indicate that another dip might not be a cause for panic, but an opportunity. So as we navigate the roller coaster that is Bitcoin's price, let's not lose sight of the bigger picture. So, should investors be worried about another dip in Bitcoin's price? Not if they understand and embrace the buy the dip strategy. This approach is all about seeing the bigger picture, taking advantage of price drops instead of panicking. It's about turning volatility into an ally. Let's consider the insights of industry experts. Figures like Cathie Wood of ARK Invest have hammered home the importance of maintaining a long-term outlook for Bitcoin. They focus on its potential for mainstream adoption and global impact, rather than getting caught up in short-term price fluctuations. Let's be clear, Bitcoin's volatility isn't going anywhere. It's part and parcel of the crypto world. But volatility doesn't have to be a source of fear. It can be a source of opportunity. When prices dip, it can be a chance to buy more Bitcoin at a lower price, to average down your cost basis. This is the essence of the buy the dip strategy. Of course, this strategy isn't for everyone. It requires a certain level of risk tolerance and a belief in the long-term value of Bitcoin. But for those who have done their research and believe in the future of this digital asset, buying the dip can be a powerful tool. Remember, strategy is key in navigating Bitcoin's volatility. Subscribe to our channel for more insights on making the most of your crypto investments. Happy investing!